Hi, fellow traders. I hope you guys are having a great weekend. Man, it's beautiful weather over here in South Carolina. I spent the last couple of days watching Gamecock baseball. They finally opened it up full capacity for the last series of the year, but ended up getting sunburnt. So I look like a cherry right now. It's not pretty and it doesn't feel very good, but love the weather. So I hope you guys are enjoying the same, having a great weekend. So this is the second stop on becoming a consistently profitable trader. Now, I promised you guys I would share some tips with you, and that's what I'm going to keep doing. It's going to be a series of tips that I'm going to leave on every recap video I do. So, just stay tuned for that. I'm going to do that first, and then I do the recap afterwards. And I try to keep it short and simple and to the point so that you guys don't lose interest. I know me, I have a 5-minute attention span. The average person has 15, so I'm going to try to keep these tips 15 minutes. So, I'm showing you this illustration because I'm going to keep referring to it, because this is a process that we're trying to get you through. And most new traders are stuck here, and they need to try to avoid losing these big losses and start to lose less, break even. You want to start identifying your weaknesses, eliminate some of the mistakes you're making. But a big thing is filtering out the noise. There's a lot of noise if you're listening to 5 and 10 different people on the internet. Everybody has their own idea, own opinion. So you're going to have to start filtering out the noise and start looking at what makes sense to you. Okay, what's logical in your thinking. And then you kind of have to go from there. So I'm going to refer back to this today, maybe next week, but I'm going to have a different illustration for you next week. But last week we talked about defining your process. That was our first stop. And it was really, really important because the foundation of your trading is your process. That's what's going to sustain you through the storms that you're going to have. Now, if you live in a house that the foundation is not right, you go through a pretty bad storm, your house is going to tell on itself. And eventually it's going to come down. And you don't want that to happen to your trading. We want our foundation to be strong so we can weather those storms. And our process is the way that we get from the beginning of our trading day to the end of our trading day. Everything is planned. We have a process for everything that we do, depending on what happens. And we all know throughout the day, anything can happen in the market. So we have to be prepared. And only experience gets you there. You start with the basics, you start with the foundation, and then you build onto that. So stop 1A, we talked about defining your strategy and establishing the rules of engagement, the ROEs. You need to have rules of engagement. And if you're learning a strategy from somebody, they're going to give them to you. And it's up to you to follow them initially and then adjust them to what your trading looks like and what your trading day looks like. Okay? But you can't make any wholesale changes, because then the strategy becomes more than likely unreliable and you lose your confidence in the strategy, and then you're up the creek without a paddle. So, and these are just some of the things that the rules of engagement should offer you. How to find the stocks. What does the setup look like on the chart? What are you looking for to happen to zero in on an entry trigger? Like for our channel breaks, we're zeroing in on a stock that's about to break the channel, and then we know what the entry trigger is. If a stock's not breaking the channel, then why the hell are we looking at it for that channel break continuation? You know, that's what I'm talking about. So it's going to give you the entry trigger. What triggers an entry? There should be no intuitiveness about it. It should be mechanical. If this happens, I enter. You know, this is the stage we're at. There's no anticipation, no guessing, nothing. And then the exit trigger, and then the stop loss. All right, so, you know, we're going to talk about a couple of things in our rules of engagement that's going to be key to your development, right? So stop 1B is about defining your risk, and these things are going to help you weather the storm. It's going to help you do the things you need to do in order to be consistent. And the first thing we need to look at is our max loss per day. We need to establish that. Unfortunately, too many traders do not establish a loss per day. They are just flying by the seat of their pants, and you take those big losses. And if you have a max loss per day and you're able to stick to it, then you will eliminate taking those huge losses for the most part. If you have DOS, if you have DOS connected to your broker, like I have it connected to all of mine that I actively trade in, you can set daily max loss limits to where it will not allow you to trade once you reach a certain max loss. Okay, so you will have to stop out that last time, but then it won't let you trade anymore. And this is a good way for beginning traders to protect themselves. I even have it because I'm at the point where, you know, I feel like I can take losses and then I could turn around in the afternoon and, you know, make it back. But that's not the lesson that I'm trying to teach you guys. And I'm not going to teach you something and not live it myself. Okay, that's why I'm doing everything in front of you guys. I'm streaming it live so you can see, you know, everything I do. And when I shut it down, I shut it down. And it's that important. Now, I know a lot of you guys are focused on what percentage of my account am I willing to lose. Well, that's not it. What you need to focus on is how much can you stand losing. Now, most of the time, you're not gonna have a $10,000 account and say, well, I can stand losing $1,000 a day. Most of you are not gonna be able to do that. Most of you are not gonna be able to stand losing $50 a day. But you have to figure out, okay, now how much am I willing to risk or lose that day? Which means, think about if you're going to the store to buy a lottery ticket or, you know, buy a bunch of scratch-offs, and say you don't mind spending $100 to play the Powerball and whatever the other games are and some scratch-offs and stuff. You don't mind dropping $100 to do that. That's pretty much the mindset you need to have with how much you're willing to lose per day. It's once you take that trade, then and you're engaged today, that money's gone. So if you make it back, that's a bonus, but that money's gone. You have to separate yourself from that and not sit there and think, hey, I need to make this money back. Because listen, it's not about how much money you make. Okay, it's about how consistent can you execute your edge in the market every day. The benefit of that will be profits. Okay, and if you come in today and you start focusing on having to make money, or you start focus on making money, that's when things start to go south on you. Okay, think about, and I thought about this analogy a couple of years ago, but when it happened to me, I didn't understand the significance of it. Several years ago when I was teaching, we had a conference in Detroit, and one night I went with some other guys to Greektown, which they have casinos and stuff there. So for the very first time in my life, I wanted to play blackjack. My thing was watching Vegas Vacation and Chevy Chase trying to play blackjack and all of that. So, I thought it was funny. I was like, I'm going to get $60. I got $60 in cash. I'm going to risk that. And so I went, sat down, and played my $60. And in about 45 minutes or so of being there, I had $460. I saw all these chips, and I decided to count them. Big mistake. I counted it. I had $460. I was up $400, and in my mind, I was like, okay, I'm just gonna make $100 more, and I'm gonna quit. So I put $50 up, risked it, lost it. Put another 50, risked it, lost it. So I'm like, well, I know I gotta win. So I put 100 up, lost it. Before I know it, I was down to my $60 that I had started with. And I was like, okay, I'm not even worrying about this anymore. I said I was gonna be here with $60. I'll risk it. So the last hand, I didn't focus on money. I just focused on trying to play the hand, and I ended up making $60 off of the 60 I risked, and I walked away from it. But I realized after learning this stuff that when I started focusing on the money and I started trying to gamble for money instead of focusing on the hand and trying to get whatever edge I could get out of this, I started losing money. And in trading, that's exactly what happens. When we start focusing, our job is not to focus on the money. Our job is to execute our strategy, our edge in the market every day. Our job is to manage our risk. Our job is to, establish our, our risk parameters. Okay, so having a max loss per day, you want to make sure that it's going to be something that you can accept. When you take the trade, you're not going to be sweating losing that $100 or so. Okay, so you've got a max loss per day. That's first. You have to establish that first, and then we work backwards from there. All right, so of course the max loss per week, we're going forward. So if we know we have a max loss per day, your max loss per week shouldn't be you max out all 5 days. It shouldn't be that. Mine is set for 3. My max loss, which is more than it should be, honestly, but my max loss is $600 per day. All right, my max loss per trade, well, we'll get to that in a minute. It's $600 per day. My max loss per week is set at $1,800, which means I can have 3 max loss days in a row, and I can't trade anymore that week. Okay, the very first time that I've had 3 max loss days in a row happened last month. It was Thursday and Friday, and then a Monday. So they were in 2 different weeks. So I didn't have to stop trading. But if that all would have happened at the beginning of the week, like Monday, Tuesday, Wednesday, I would have no more trades. I'd be done. So we have to set that. And what that does is that keeps us in the game. If we have to go through a storm and we take some damage, our damage is going to be limited so that we can put it back together and come back. All right, so we have our max loss per day. That's what we start with. And then we went to our max loss per week. Should be three days of our max loss per day. It shouldn't be 5 days. Even if you're risking only 100, if you max out 3 days in a row, there's something wrong with you or the market. So it's best to stop and just kind of reflect. Go back and look at those 3 days and try to figure out whether it's something you did or whether it's something the market has done. If there's a shift in the market, now what can I do to adjust to this shift without making wholesale changes? Is it shortening my first profit target so that I can ensure locking in some profit on this? Is it that the market has shifted, it's really choppy, it's going through something? Should I just sit out and wait and only look for these type of setups? All of these things we have to just stop and take a look at if we hit our max loss per week. If newer traders did this, if you guys that are struggling, if you do this, you're going to turn your trading around. When you do this and then do what I'm going to share with you in the next video together, you're going to turn your trading around almost immediately if you have the discipline to follow it. Okay, that's the hard part. The easy part is me laying this out to you. It's simple. But executing it is where we have to get going. All right, so now our max loss per trade has to be established by our max loss per day. So if we're losing, let's say we're going to lose $300 per day. All right, that's our max loss per day. Or let's do 100. It'll make it. No, we'll do 300. $300 per day. All right, so we could break this down into risking $150 per trade for 2 trades, or we can risk $100 per trade for 3 trades. So that gives us 3 trades that we could execute, and if we lose on all 3, then we'll be done for the day. But it gives us 3 shots. If you want to do 2 and risk 150, then you've got 2 shots. And you guys have seen me, especially last month, be done trading before 9:45, because I would have hit max loss on 2 trades in a row, $300 a loss. Which I said it should be 200, but I used 300. I hit it twice. That's $600. I'm done for the day. I can't trade anymore. Okay, I'm just here for you guys. But that's it, and that's the discipline that I need you guys to develop. Because I promise you, if you can set your max loss per day, establish a max loss per week, your max loss per trade, I guarantee you that you can get to that next level. Put that with what I'm going to share with you next week. And that's going to be the stop loss parameters. Stop 1C. We're going to talk about position sizing, how to position yourself so that you can take advantage of this part of your process. This should be an advantage to you guys. We're not, just because we say max loss, it's not like we're planning to lose. We're planning to actually win. Just because it says lost doesn't mean it's lost. Just because it's red doesn't mean it's red. We're actually planning to win. We're planning to make money. And how we make money is we limit the amount of money that we lose on our bad days and on trades that just don't work. So we're going to talk about some parameters and a couple of different strategies you can use to help you, that if you implement these along with sticking to your max loss, you could become almost instantly profitable. I mean, I know it sounds a little crazy, but this is how you get to losing less and learning more about your trading. You identify the things that creep in that cause you to do stupid things. You start eliminating those mistakes that these weaknesses cause, and you start filtering out things that you know don't make sense because you've lived it and you know it doesn't make a damn bit of sense. And before you know it, if you do these things, you're going to be turning your weaknesses into your strengths. You'll start to see small wins. At the very least, you'll be breaking even. And you'll start to see some consistency in your trading. It's not about consistency and making money. I pointed that out to you guys, showing you my profit calendar. It's not about consistently making X amount of dollars every day. It's about coming in and executing consistently and taking what the market gives you every day. Here last week, I had a huge day on Tuesday, $1,700. But look at the rest of the week. Monday, Wednesday, Thursday, Friday, we were in a freaking chop fest. Okay, Tuesday we had beautiful follow through. Now, yeah, there were a few stocks that followed through Wednesday, Thursday, and Friday, but for the most part, you know, the stocks that we normally trade, they weren't following through. But look at where I ended up at the end of the week. Okay, look at, you know, it wasn't about Monday, Wednesday, Thursday, Friday. I did my job. You guys know the days that I shut down early. And when the afternoon, Thursday and Friday afternoon wasn't there, I wasn't trading. There was no need to take trades. And in the live classes that I've been doing, I pretty much proved to you. Now, Wednesday, Thursday, and Friday were really, really quiet. So there wasn't a whole lot to talk about. But the fact is, I was trying to prove, when I see things pop up, I try to prove to you guys, if you sit there long enough, something's going to look really good and you're going to want to trade it. And if you ask somebody and they point out something that you just completely ignored, then you understand where I'm coming from. All right, so this is what we ended up last week. All right, and this is why I feel that it is so important that if you're going to learn how to trade and you're going to learn from somebody, you need to be there watching them side by side. Not listening to them call out stuff, watching me execute. When I make a mistake, watch me make a mistake and watch me rectify. When I lose control, watch me bring it back around. Watch me regain control, regain focus, come back and do what I'm supposed to do. These are the lessons that being in a community, being in a trading community is for. You know, that's why you're there. To learn these very valuable lessons. Okay, so, you know, going forward, I want you guys, everything that I'm sharing with you, please, if you need to go back and watch it again, watch it again. If you have any questions, just make sure that you email me. You know, ed@AverageJoeTrader.com. Just email me directly, and I'll be glad to answer. Your equity curve needs to be headed in the right direction. We're going to have pullbacks. We're going to have bumps in the road. And we're going to have times where we have solid gains, consistent gains. And there are going to be days where we have consistent losses. But over time, if you do the things that you're supposed to do, this is how your equity curve is going to look. And you're not focused on making X amount of dollars. You're just focused on doing your job and watching this equity curve go up. Because, like I said before, it's not about how much money you made, but it's how you made it. If you made it following somebody or following their trade or mirroring their trade, you're not going to be able to sustain that. So it doesn't really matter. To me, people posting, big wins, it's no big deal. What impresses me is consistency. Is at the end of the week, at the end of the month, where you're consistent in your execution. And did that consistency, bring you some positive results? Or if they brought negative results, did you identify what happened? That's what I get excited about. One characteristic that defines professional traders is that they do not overextend themselves. Now, yeah, you do have some that get cocky and they do overextend themselves because they think they're bigger than life. But most traders that survive in this industry, whether they trade for a prop firm or whether they trade for a mutual fund or an investment bank, whatever, these guys do not put their company's money at risk. They do not take unnecessary risk. They do not let any stock or any position destroy the money that they have in their charge. And that's the way we need to look at it. As traders, we have to look at, our positions and say, hey, there's no way I'm going to let any stock or any position I take in the market take my money from me. And what I mean take your money, that's money above what you initially risked when you took the trade. When you took the trade and you stopped out where you were supposed to, the market didn't take your money. That was what you willingly gave it to them. Okay? And that's fine. There's no big deal there. But if you let it take more than that, if you go above and beyond what you initially risked, then they're taking your money. All right, so don't forget, guys. Listen. I'm going to go back to what we talked about today. Make sure you set a max loss per day that you're comfortable with. In the sessions, I can help you to develop that. But it boils down to what can you deal with. I can tell you what's logical for your account size. That doesn't mean you can do it. It has to be what you can do, and then build it up from there. And of course, you want to establish a max loss per week so that if your week goes bad, stop trading. Look, trade in a damn simulator. Most brokers now, they have a sim attached to the main account lot with DOS. I had to call them to take it off because when I updated my IB, they finally made me update it because the old version stopped working. When I updated it, I got a damn simulator account. And so when I first took trades in it, I was trading in a damn sim account. So I had to get them to take it off because I don't need that aggravation. And when I hooked it up with TD Ameritrade, same thing. Had to get it taken off. But for me, I really don't need it. But if you're going through this process and you're learning, you need to get as much screen time as you can. However, if you reach your max loss and you can't trade live anymore, that's when the paper account or the sim account is going to be excellent, because you can trade the afternoon and you could see just how screwed up the afternoon can be and how punishing it could be when you're trying to force things and you're doing it in a paper account. But you're gaining experience. You're learning how to read price action. You're gaining that market experience. So you want to take advantage of those things. So stay tuned for the next one. Where we talk about the stop loss parameters. We're going to talk about position sizing, how to come up with simple ways to establish position sizing, and a couple of different stop loss strategies that you can use. Because the idea is not to sit here and take a max loss every time you lose. The idea is having a max loss so that if the trade gets away from you, it can protect your profits. But when you set your stop loss, it needs to be based on some type of technical level that's going to let you know you're losing on the trade, or this trade is not going to work. And if you're fortunate, you will be able to stop yourself out prior to hitting that max loss, which gives you more life, in the market. So, but we're going to talk about that next time. If you know anybody that needs to watch these things, send them the link to the first one. Send them the link to this one. I'm not paying any advertising or anything like that. I'd rather it get to people by word of mouth, because that means it means something. And I only want people that's actually going to be serious about this engaging. I mean, that's my philosophy. So you guys have a great rest of the weekend, and I will catch you in the morning.